Why don't you talk me through how you're thinking about the volatility around cryptocurrencies and your Coinbase buy?
You know, it's really interesting, right? Crypto in general is a newer asset class. For people that are comparing it to gold or as a replacement for gold today, I think that's lunacy. But 10 years from now, who knows? I don't have a crystal ball. What I will tell you is that I am seeing a lot of interest on the institutional buyer side from the asset owners as well as asset managers balancing their portfolios with exposure to this. For me personally, a way to kind of hedge some of the volatility, but also participate on the upside, not pick the winners and losers in the crypto space. That's why I bought Coinbase. Coinbase, though I do believe it is a user growth story, and I want to, we can talk about that at a later date. That particular platform is an exchange, right? So when it's volatile, guess what? Coinbase is going to make money. Revenues have been skyrocketing. Coinbase was, I think, penalized because of what was going on with Bitcoin over this past week. And the valuation absolutely says this name's probably worth $400 to $450 a share. And so if you want to kind of play, if you will, in the crypto space and hedge your risk a little bit, Coinbase is a great opportunity to do that because you're making money on the exchange, on the flow of cryptocurrency. And real quick, Scott, just to hit on Elon Musk's point, as regulations do begin to come into this market, Coinbase is the best positioned to actually enable those regulations, monitor them, manage them in a very orderly way. So pay attention to that. They will lead in this space, and they will take off from the competition as it comes
Unless
forward.
you think Coinbase's IPO was peak Coinbase and peak Bitcoin.
No.
Right, because look at what Coinbase has done since it went public. Look at where Bitcoin is from 60,000 to barely holding on to 40,000.
Yeah, but Scott, it's gone up and down, and we know that, and there's statistic after statistic as it relates to, over the course of the past 11 years, Bitcoin has seen more than 750 instances where the daily change was 5% or greater, 230 times 10%, 50 times 20%. This is a volatile asset class right now, right?
I thought it was a store of value, though,
if you want to play in it.
Come on, everybody says it's a store of value.
What did I just say?
I know.
What did I just say, though? I know, so I'm giving you the other side.
Your expense on that because that's it's a store of value. Right? That's what we hear from everybody, right?
Yeah, right. It potentially will be long-term.
Let's do this.
Long-term. It could be. Absolutely. But today, you're not in this name with the idea that it has found its footing yet. Long-term, I think that crypto is here to stay. Who the winners and losers are, I can't tell you. But as an asset class, cryptocurrency is alive and well.
Okay. Well, Josh Brown, do you have a comment on this? You must. You must.
Well, Coinbase acts like a falling knife because they didn't do an IPO. They did a direct listing. So I keep hearing people say since the IPO, what's different about an IPO and a direct listing is that in a direct listing, insiders don't have to hold. That's the trade-off, okay? So we saw this with Spotify. We saw this with Slack. We saw this with Palantir. Companies that come public in a direct listing, over the next couple of months, there's tons of insiders dumping stock. They have the right to. When you see an IPO, number one, it has institutional sponsorship right out of the gates. All the firms that appeared on the filings as underwriters are all of a sudden covering the company with a buy and a strong buy. So that's one big difference. But the second one, the more important one, is that you don't have people dumping hundreds of millions of shares the next day, the next week. They have 9-month lockup. 6-month lockup, 12-month, depending on the deal.
Right.
So look at the companies of Coinbase's size that have come to the markets in this format and understand you don't buy these things when they open up at a 200% premium over their offering price. It's suckers only. And you have to learn how this business works before you put money at risk.